Everyone, you can see the screen? Just let me know because I sometimes don't realize that hasn't loaded yet.
Yes.
Is it there? Okay, great.
Yes.
So the first thing that we're going to cover is looking at the chart and ascertaining that you know what to do. We are going to cover three basic tactics. Well, these tactics are the core of Pandora that you've seen on the Patreon. It's essentially a very powerful bot that utilizes multiple indicators, multiple time frames, 8 time frames, and 8 ADX engines. Now, the human brain will not be able to process all of that information at the same time because, well, the level of calculation that goes into that is tremendous. However, it all boils down really to what we're going to discuss today. What we're going to look at first is scalping using one lot. Why do we want one lot? A single lot, when you trade, is worth about 8 to 10 US dollars. So that means if you open a trade using a lot, in 1 pip, you've made about $10. In 2 pips, you've made $20. The benefit of this is when you execute this trade, you jump in, you jump out really rapidly. Most traders, especially the newbie traders, they would ascertain that, hey, okay, I want to make a lot, so why don't I go for 20, 30 pips? If you do that, okay, that's good. Unless you're in a very strongly trending market, there's a very strong chance that there will be a reversal and then you would lose your entire portfolio. Many of you who have started out know this, especially those who have utilized the commercial bots back in the day. Now, several of these bots would have a default setting of say 20 to 50 pips. In a single trading day, the pips will go up, say, in the US session by about 20. Yeah, that's good. But then it suddenly can reverse. So if your take profit was set beyond the range, then you would have lost instead of gained. Now, the reason that I advocate one lot trading, and this is possible if you have 2K in the trading account or even 1K, is because when you enter with the right signals, you're definitely going to hit your 2 pip take profit. So what we're going to look at today are the signals for this first method that you want to ascertain so that your 2 pips are closed within maximum 5 minutes. And because you're trading in one lot or even 2 lots, you would easily make what, 20 US. And if you repeat that, wash, rinse, and repeat this throughout the day, you are going to be amassing quite a hefty portfolio. So everyone follows me so far? Well, I'll take silence to be an affirmation.
Oh, actually,
so, yes, go on.
When well, I don't know, maybe I was on the wrong markets, but like some markets, they went up like 300 pips or down 300 pips in 5 minutes, and other markets like they go up and down half a pip in like a few hours, but those half pips were worth like a lot.
Yes, I know what you're referring to. The GBP pairs, the JPY pairs, they move a tremendous amount. GBP USD, GBP JPY, within the span of 1 hour, you can see a movement of 70 to 80 pips. So if your stop losses are, well, very small, you can get stopped out right away, which means you would have lost in the trade. Now, on the other hand, if your stop losses were really large, like 300 pips, but it went the wrong direction, you would again have lost a lot of money, which is definitely not to your favor. So there are 26 pairs that you would like to deal with. And for most of you who have delved in this for at least 3 months or 4 months, you know that the major pairs, that's Euro USD, AUD USD, USD CHF, USD CAD, USD JPY, and NZD USD, they give you the most in terms of profits per pip. So on average, one lot would give you around 8 to 10 pips US per pip. The minors are those that do not have USD in the pairing. So we're talking about Euro AUD, for instance, or CAD CHF. they are a little harder to manage because they don't trend as well, and they give you much less per pip. So one lot will give you about $4 to $5. So if you want to maximize your returns, what you want to do is you trade in the majors. And when you're really good at the majors, you go for the minor. So those are all the other pairs that do not have USD in it. So that's the first piece of advice I'm going to give you. And then the second piece of advice before I go into the charts is this. News. Nav knows about that. Let me share my screen with the calendar for today. This, oh wait, it disappeared. This is my FX book. Lists for you all of the news that will be released on a day-to-day basis. And it's very important that before you open a position, you know that you will be trading within an hour of the news. If your intention is to trade news spikes, and that will be something that we'll cover at the end of the session, that's well and good. But if you're doing normal trend trading and you are opening a position within an hour of the news, there's a very strong chance that you would lose a lot of money. The reason being, for instance, we're looking here at 7:30 today, New York time. If you opened a pair that had the CAD or the USD in it, and you have three of these pieces of news at the same time, that means you potentially are looking at a 20 to 80 or even 100 pip movement. And if the movement is contrary to what your original position was, you would have been wiped out, especially if you're trading in one lot, because every lot is about 10 USD. So 10 pips is already 100 USD. If you have only 100 in your account, you would have been wiped out. If you had 1K in your account and it moved 100 pips, that 1K account would have also been wiped out. So team, you're following me so far?
Yeah.
Yes.
Okay, so first rule of thumb, deactivate all bots before 1 hour before the news and 1 hour after. And do not do any manual trading 1 hour before and 1 hour after the news. The only exception is if you are trading news spikes, and I'll explain that later. So let's go back to the charts. Okay, here's your standard chart without any indicators latched on. Pretty much as a trend trader, you really wouldn't know where to go, because just looking at this, you have no idea if you open a position now, it will go down. You also have no idea if you open the long position, it will go up. So it's really a binary decision. You can go wrong very, very easily. So I uploaded several indicators on Google Drive for you. And the indicators that I've provided are the public domain versions. I have customized versions of those indicators, but the principle is the same. So the first thing that we are going to do is, I'll go step by step before loading them up. Let me go here. The first thing we're going to add is the Alligator. And you can use pretty much their standard defaults. You have that already with you from Google Drive. Before you make a decision to open a position, you only have to look at 2 time frames. You can look at the others, but from experience and even from the operations of Pandora and Hera, which is running very complicated analysis of these charts, all you have to look at is the M15 and the H4. You look first at the H4 time frame, and you want to make sure, okay, here's one signal. You want to make sure that the price line, here are the bars, are not touching the green line. The green line is the fastest moving. So what you're looking at here is you want to either go long or go short. And right now, the H4 time frame is telling you that the price is moving, trending strongly upwards. This is the first signal you want to see. And you want to make sure that the price, yes, go on. Yeah,
Like,
question.
what are the difference between the different time period? Like H4 is 4 hours,
Yes.
I guess.
H4 means it's every bar that you see here looks at is a clumping together of 4 hours. So this long green bar that you see here that I'm pointing at is the
Okay.
movement, the price, 4 hours. This is another 4 hours. This is another 4 hours. And right now, this really small bar here is the current grouping of 4 hours.
Okay.
So what's important is H4 before you trade must be trending in a certain direction, and M15 must be also trending in the same direction. They both have to be going long, because if one is going long, one is going short, or one is consolidating, if you enter a trade on M15, there's a very strong chance you're going to lose that trade. This is called the double-barreled method of trading. Pandora looks at all time frames from M5 to H8, sometimes D1, but that's impossible for us to do. For manual traders, what we want to do is we want to look at only two, and that will be more or less enough. So again, the first signal that you want to see on H4 is that the bar is steep and it's moving in a certain direction, and the price is not touching the green bar. If you see the price touching the green bar, the green line, there's a very strong chance that the market had exhausted and it has started to weaken, or it is starting to consolidate and change its trend, meaning it might go down. So this is the first thing. You look at H4, okay, you note, okay, it's trending upwards, it's going long. So after that, you go to M15. So now that we are in M15, you have to see the same signal, meaning that the price should not be touching the green line. It should be trending long. And if it's not trending long, automatically this invalidates your decision to buy, because right here you see that there is consolidation, meaning that the price is flatlining with the EMAs of the Alligator. This is the Alligator indicator, which I provided for you on Google Drive. So automatically, I am going to tell you, you are not going to trade AUD USD at this time, because H4 and M15 do not jive. So let's look for another one before, yes.
So these are EMAs. The Alligator indicator has 3 EMAs.
It has 3 EMAs, which are based on Fibonacci levels. So the green, it's known as the lips. The red is the teeth. The blue is the jaw. It's based on Fibonacci, and it gives you the best possible view of the trend. So right now, I will tell you, junk this pair. Let's not do this pair, because there is no alliance between the H4 and the M15. Let's go to another major, Euro USD. This is in fact the prime major. It has the highest value per pip. Okay.
But you mentioned that you have to watch it trending long. What does that mean? Trending long, trending short. What does the line look like?
Okay. Let's now at Euro USD. Let me go to H4 again. The first thing you want to look at is H4. You look at the trend. So the trend is because the green line, which is the fastest moving EMA, is moving downwards. That means it is going short. That means the price pair is dropping. So that means if you were to open a trade, it should be a short. But the thing is, automatically you see it's invalidated, because the price line, the current price line, is sandwiched between the green line and the blue line. When you see this, this is an indication that the price is consolidating, and when it is consolidating, it is ranging. There is no direction to the market. It can either go long, meaning going up, or it can be going down. So this is automatically a trade that you do not want to take. So we can further verify by looking at the M15 chart. So the H4 is just for validation. The M15 is actually where you're going to trade, and you want to trade within the bias of H4, meaning if H4 is trending strongly downwards, then you have to go short. If it's trending strongly upwards, you have to go long. And here we see the same thing again in M15. When the EMA lines, the exponential moving averages, are flat. They're not pointing up or down. That means, again, it is ranging. And opening a trade here as a trend trader implies that there's a very strong risk that your position might lose. Okay, so before I look at another pair, any questions on this so far? Okay, no questions.
So, just to confirm, first we look at M15.
You look
sorry,
at
sorry. First we look at H4, look at the major trend. Then
yes.
Then we check the trend on M15. It should be in the same direction.
Yes,
and
the same
neither
direction.
of them should be, neither of them should be touching the green line, right?
Exactly. And it's very important to note that if you see the price line within the three lines, you cannot take a trading trend, but you can take a hedge trend. And that is going to be part 2 of this discussion. So trend traders can reap profit. Range traders can also reap a profit, and I'll show you how to do that later on. I want to find as a pair which is trending so that you will know what to look at in the future. Let's look at USD CAD. On H4. Okay, here's another one. This is already a good signal. The most recent is it's trending downwards. So we see the green line pointing down. The price line is deep and it is not touching the green bar. So first signal, go short. Let's go to second validator, M15, because all your trades will be taken in M15. Again, we have a problem. The trend is not downwards, it's flat. We see the EMAs virtually horizontal and we see the price line sandwich. So again, we will ignore this, this pair. NZD USD, let's try this one. Before we go to M15, let's go to H4. Okay, trending strongly upwards. Green line, the price is not touching, and we see that there's a minor drop here. So this is a potential for a buy. Let's go to M15. Nope. Here you see the exact opposite. It's about to go down and the price is sandwiched also between the lines shortly before and it's going down. So you have two contradictory signals. That means if you were to make a move now, you go short on M15, there's a very strong chance the bigger trend, the more powerful trend over the 4 hours might overpower and your position might be stopped out. So again, we ignore this pair. Let's try, well, we haven't tried GBP USD. Again, here we have automatically invalidated. This is a ranging pair. It's touching. Let's skip that. Let's try a minor, Euro GBP. This is one which moves 100 pips usually on average. No good. Another hot tip I'll provide you folks right now is recently, because of COVID apparently, during the US session, the pairs tend to range a lot, but I have noticed that during the London session, which is about 2 a.m. Hong Kong, Singapore, the trend is very strong. The same with the AUD session. So this is during the Japanese Open, the Aussie Open. We're talking about 7 to 9 a.m. Singapore time. You would notice a lot of the trending pairs that we are trying to look at right now. Let's check for GBP CHF. No good. Obviously it is ranging. Let's see GBP CAD. Okay, here's another one. This one looks good. Trending strongly downwards, not touching the green line. Let's check and see and validate if M15 says the same thing. Okay, we finally have a potential. M15 is telling us to go short. H4 is telling us to go short. So do we go short? Technically right now on what we see, yes. So what is the next thing that I want you guys to look at? We have this other indicator called the oscillator. I'm going to add it on the screen. It was also uploaded to your Google Drive. You can use the standard settings. It's also good. This is the Alligator oscillator. When you see the bars all green, right now it's all green, that means you're trending. That means the power towards going short is strong. And if you were to open a position, you would essentially be hitting a TP in no time. So that's the second thing that you want to look at. If you have your charts open right now, I would recommend that you add an indicator. So that's the second step. Third is to validate with this other indicator that I also provided for you. The pivot points. This tells you exactly how near you are to support and resistance. So R1 means resistance. This is the resistance level 1 to go up. You're right now at support, and you've reached support level 1, which means that you can still go down a lot, and you can see it's going down. You are not to take a trade when you are close to either R4 or S4. That means support 4. That means when you're at level 4 of support, there's a very strong chance you're going to reverse. On the other hand, for those of you who trade on support and resistance, if you are at level R4 on the top, resistance level 4, that means your long positions might start going down. So you are in a good zone. Essentially, you want to trade anywhere from between R3 and S3. And how are you going to open your position right now? You look at your most recent swing low, because you're going to open a short position, you're going to sell. Your most recent swing low is this point. You want to open a position there because that means eventually price is going to breach below this point. You don't want to open a position here yet because you're not yet certain of exactly where it will go. So the way that you're going to do that is you're going to open a sell stop. A sell stop, for those of you who are hearing for the first time, is a position that will be opening below the current price. So right now the price is at 1.74. Oh wait, it keeps on moving, 1.72474. So to open a sell stop, you simply do this. First we set the lot size. Let me open the lot size up there. I can't seem to move it because of Zoom, but anyway, to open a sell stop, you simply move your mouse to the tip of this bar. You right click. If you're using C-Trader, same procedure with MT4, and then you click on sell stop. Automatically, you have a position here that is open. These bars will drive downwards eventually because the EMAs are telling you that the force is downwards, it is selling. And when it hits this position and it moves to, I automatically set my dashboard to 2 pips TP. It will close in 2 pips, securing what you wanted with one lot. But let me show you first that you have to set your background so that your defaults, so that whenever you set those purchase orders, they are in the right settings. So we want to go to quick trade. You want to ensure that your take profit is 2 to 3 pips for market orders. Your stop loss is maximum of 60 pips. That's usually the average for GBP pairs. For stop orders, you also want to do the same thing. Set it at 2 to 3 pips. If you really want to be safe, set it at 2 pips. Limit orders, 2 pips. Let's go back to the chart.
60 pips for the stop loss. That's a lot,
60
right?
pips, it's a lot. It's just a default, but personally, I prefer setting it on your resistance levels. So what you want to do is you look at your resistance, 2 or 3 resistance levels away from you. So currently your price is here. You can actually set it to this first level, because if it goes above resistance level 1, there's a very strong chance it might start going up all the way, going into a long position. But you can actually set it to, let's see, H1. You can set it at resistance 2, which is this level, because this is the bigger picture. If you were to put it at 2 levels above your price here, if I draw a line here, you can set it at that point, the price of 1.73301, which is, if we were to drag the calculator down here, oh yeah, it's about 77 pips. Because we are looking at GBP CAD, all the GBP pairs swing a lot. So the rule of thumb for stop loss.
So one loss can erase 30 successful trades.
Yes, but here's the thing. You want to ensure that your trades are very secure, which is why, first of all, you're validating that your trend on H4 is all for short. Your trend on M15 is also all for short. And you are not breaching beyond the level of support level 4, because if the price had breached S4, you can pretty much expect a reversal. So you don't want to reach that level.
Excuse me, what's a reversal?
A reversal is when the price, like for instance, look at, okay, I'll move my cursor here now. My target. Let's look back to the previous price. The price went on a very strong uptrend until it hit this point. Most likely that point at that specific period in time was maximum resistance level 4. That means there's several layers of resistance and support where the price likes to hit a certain median. There's a median level. Price prefers to gravitate to that, but sometimes it'll go up, it'll go down. If it goes up too much, based on the calculation of the previous day, that's at say resistance level 4, it will start to hit that ceiling, then it'll go back down like you've seen here. And right now it's going down, and it's at level, well, S1, S2 already, which is still safe for you. That means you can pretty much expect that it'll go down further. But when the price, these bars reach S4, you can pretty much expect the position will start to reverse. It will start to go back up. Essentially, the currency market is like that. It goes up, it goes down, it goes up, it goes down. You want to maximize your chances by ensuring that you're only within the highest probability of going down or going up, and not reaching a point of exhaustion where you go, for instance, short, but then the price totally reverses. Got that so far?
So in your experience, how often do you hit the stop loss?
Very, very rare. If you were to look at the current metrics of Pandora, the stop loss, 97% success rate. So that means for every 97 positions, there would be 3 that would be lost. And those are the ones that will hit the stop loss. And the reason being right now, because Pandora, the C-bots, are consulting not just an M15 and H4, but on virtually all the time frames. However, even as a manual trader, you're eliminating the risk by ensuring that you at least follow the primary trend of H4 and trading on M15, ensuring that M15 is following the same direction and bias of H4.
Yeah, and 2 pips seems to be very safe. 2 pips you would generally hit. I mean, it's very conservative. Yeah.
And so, okay, let me go back down to H4. Here's another thing that will make you more confident. If the alligator oscillator is essentially a measure of how much trend power the price for that time frame has. If it's all green, that means it's trending very strongly in the direction of the EMAs that you see right now. So if it's all green, you have confidence it will continue going down. But the moment you start to see a break, red and green, the implication is it is starting to range, lose power, meaning it'll start going up and down in small movements. So you might not hit your TP. But because your TP is set at 2 to 3 pips, you might still hit your TP, but you definitely do not want to trade when the alligator oscillator is all red or green and red. You want to trade only when it is all green, regardless of whether you're going long or going short. Follow so far?
Yes.
Okay, let's go back to M15 and see what's happening. Okay, see, this is what we call a retrace. The reason that we opened this buy stop, sell stop down here is because the market has this tendency to hit a certain maximum limit, then it will retrace a bit as you see it doing now on M15, and M15 tends to be very noisy as well as M5, but then it will start to go back down again in the general trend that we see here. So it will go beyond the red line where we set the sell stop, and it'll hit the TP, which is 2 pips away. So it'll take some time for this because let me see how long that bar is. It's about 21 pips. So to hit this sell stop, it's 33 pips. So while this is running, let's look for another pair that we want to play with.
Just one question.
Fire.
When the TP is 2 pips, won't that be less than the spread for some of these minor pairs?
That's a very, very good question. IC markets has one of the slimmest spreads around, virtually zero pips for most of the majors. On average, it would be 0.1, which is why scalpers prefer to go to IC markets. Secondary to IC markets, we have FX Pro. They have very good spreads as well for the majors. So you can pretty much get your $20, $30 profit target if you're trading on the majors. The minors are providing a lot less. So you don't want to do minors.
Okay.
Okay, let's open under there so that we can see the logic. Let's check Euro AUD. At H4. Okay, in the bare naked chart, you pretty much cannot tell. I'll load I already saved my templates, so you can pretty much save the templates as well. Fractals. Okay.
Holy hell.
Yeah, these are the customized, this is the customized indicators that I've had created. So the ADX that I've sent to you is, it will show you the average directional movement for each time frame. But here, what I've done was I've had it all reported on a different line. So you can see the ADX. ADX is the force up or down. And I use that together with the alligator, together with the oscillator. So you only want to trade when it's all green. And ADX tells you how strong the push is in a certain direction. the de facto rule of thumb is for every time frame, it's trending very strongly if the ADX is from 20 to 30. Below 20, it's not trending, but it's ranging. So this is the extra confirmation that you want to see. So right now at H4, what is the ADX? It's trending strongly downwards because it's negative 25. So that's another good thing. I sent you the ADX, but it only displays for the current time frame. But all you really need is M15 and H4. So automatically I can see that M15 time frame for ADX is not really trending strongly. It's below 18 and it's going upward. So that means it's ranging. So if we were to click on the M15 chart, we can see the exact opposite. Automatically, I would rule out Euro AUD because the alligator is going up. The price is trending upwards. Even for the oscillator, it's trending upwards. There is a big contradiction with H4. So you would not want to do Euro AUD. Let's look for another one. I want to see one which is really close to, you know, its point of exhaustion. EuroCAD. Let's see EuroCAD. Let's go down to H4 first. Trending downwards. Green line, price not touching. So first signal is good. But then you can already, but you can already see that the ADX, well, the ADX is just extra confirmation. You can use it. I definitely use it because it will prevent you from jumping into bad trades. You can opt to only rely on the alligator oscillator and the alligator up here. That is enough confirmation, but well, I like to be very safe. So let's see if it's trending downwards in M15 as well. Looks like it's not. And the ADX already said it. It's going upwards. So you don't want to do this trade. Let's look for another one. Euro CHF. M15, it's ranging. You can already tell it's ranging because it's horizontal, so you want to ignore that. You only want to trend in a trending market. Okay, here's another potential. Trend is strong upwards, M15. Let's see H4. Nope, no go. The reason it's no go is, well, it was trending downwards, but you see that the price line had not only touched the green line, but it had touched the blue line, meaning that there is a very strong chance for a reversal. There is no confirmation. Let's check another pair. Hopefully we find one which is aligned with the perfect trade. H4, this one is looking good. It's not touching the line. That's a potential short. Okay, no, also no good because on M15, it's starting to range, meaning it's consolidating. The market is not decided as to where it will go. So far, you have seen a lot of the potentials where you should not open a position. That already filtered out trades that could have lost you a ton of money. So let's look back at that chart that we opened the trade at, GBP CAD. It's starting to go down, which is a good thing. But it'll probably take us about 15 minutes before it reaches this point. So let's look for another pair. CAD JPY. Hopefully this is one. Okay, it's trending upwards on M15. What about an H4? It's also trending upwards. Okay, it's a go. So what would you as the trader do? First, you confirm on H4, it's going up. That's a good thing. Price is not touching. The oscillator down here, the alligator oscillator, gives you double green, which is another good sign. That means H4 on the H4 time frame, it will continue to trend in that direction. If you see the wrong colors, reds and mixes, that means don't trade because it might change. So when you have the confirmation on H4, you go to M15, and this is where you're going to open your trade. You can also look at the ADX for extra confirmation. It's just optional. I often do, but I will still look at it. Right now, it's still safe to open the trade. So what will you do? You look at your most recent swing high, which is this red bar over here. And then from that red bar, but I have so many windows that are popping up and blocking my access. Just a moment. Okay, so how do I zoom out here? Okay.
Right click
so anyway,
and then
what you want to, okay, here we are. You put your mouse here at the most recent high point. And then what you do is, okay, let's change this to one lot. One lot is 100K. And then you go up here, you right click. And because this is a long trade, you don't do a sell stop, but you do a buy stop. Now this price, after touching here, this is a retrace. You wait for it to hit that. And when it hits, your position is closed. That's what you want. Now take note that if we look down, we see the red and purple. This is not really that important on the M15 chart. It's more important on the H4. If you see these colors on H4, don't take the trade. That means there's a chance it might range too long. It will just bounce up and down in small movements and it will never hit your TP. But on M15, it's okay because M15 tends to really be noisier and there's a lot of movement. So right now, all we really have to do is wait for this price to hit that TP. So the rule really to open your position is once you've validated an H4 that the trend is in the direction you want, you go to M15. You take a look if M15 is trending in the same direction. If it is, you look at the most recent highest point, you open a stop there, a long stop, a buy stop. Set it to 2 pips and you wait. So this is the first core method that I wanted to provide to you. And when you open that position, you can modify your default settings in that you've seen earlier of 60 pips stop loss. What you can look at is your support and resistance lines. I sent you the indicators for this as well. You can go 2 or 3 resistance lines below. In this case, because you are at R3, you can set it at R1 because that means if it hits R1, you pretty much have lost it already. It might go below. The thing is you are at R3 and it is also close to R4. So when you're already approaching within 5 pips of resistance level 4, don't take the trade. It might look good, but unless your ADX is giving you a very nice number like H4 is at 25 and M15 is at 25, then take the trade. That means there's still a very strong pressure upwards. Questions so far?
So 2 pips is the golden number, right? 2 pips should be there.
2 pips is the goal because you're trading at one lot. Typically in a position like this, if you're still within the R2 level or the R1 level, you can even expect higher pips. You can set it at 5 pips. Like how big is this bar? 14 pips. You can set it to 14 to 17 pips. So imagine, for instance, you were only at this point right now, here. The prices to the right had never happened. And it was trending upwards. And you set a stop here. Yep, it went down, but then ultimately, it went all the way up there. Whenever you set a stop order on the most recent high, later on the price would breach that level much, much higher. So that's the logic for this form of trading when you're trying to confirm from both M15 and H4. It will always happen. So for instance, if you see where I move my cursor here, if you open the stop here, the price would have retraced down, then it automatically went up. Of course, you assume that you haven't seen these prices yet.
Yeah, and trading is very hard to keep calm when you're when it's in negative for so long, and then you wait for it to go up.
Yes. The good
That is
news
the
is
hardest.
You won't be in negative so long, and you won't be experiencing that much anymore because, folks, you won't be doing market orders, meaning opening positions on the fly. You are opening stops only when you are seeing the pattern. And right now, you will open the stop only when you see the retrace. So right now you see this point, there's a retrace here. You don't open this, you don't open a market position, you open a pending order. And when the retrace is complete, you wait for it to move up and breach through the price line that you've set at the top of the most recent high. So the same logic applies when you're going long, going short, when you're selling. So you look for the most recent swing low, the lowest price, you wait for it to retrace at least 2 bars, and then you set your stop, your sell stop order at the most recent swing low. No question? All good? Let's look for another, okay, so eventually this is going to hit TP after this retrace. Take note that in every market, there is always a retrace. After it hits a high point, it'll go down, then it'll go up again, beat the original price, then go up and up and up, then it'll retrace again. So most folks who enter the market and they're new, they always get aghast when they open the order. Automatically there seems to be a negative 30 pips, negative 40 pips. It's just natural. But with these indicators, you can pretty much tell right now the direction that it'll be hitting. Are there any questions on the indicators that are on the screen? More clarifications needed? The pivots, the support resistance, oscillators, ADX?
It's clear.
Okay. Okay. So, well, we can see that this is going up pretty much. Eventually that'll hit. Okay, if we're good with this, do you want one more sample walkthrough with this trend trading method, or do you want to go to the second method, which is the range trading method?
Second method.
Second method. Okay, good. We saw a lot of those. Okay, we're looking at Euro AUD. We are doing the very opposite of what we were looking for in the previous method. We wanted to see trending. We wanted to see a strong direction upwards or downwards. In this case, when you're doing hedging, you want to TP in 2 directions, meaning you will be opening 2 simultaneous orders. There will be the sell and there will be the buy. So what are the signals that we want to look at? We want to ensure that in H4 and M15, the market is not trending. If the market were trending and you did a hedge order, one position will take profit, but one position will take you into a very deep negative loss. So what are you looking for? First, we want to see ideally the price line on H4 is touching the green lines or even the red lines. It's really ideal if the price bars that you see here are all sandwiched between these 3 lines. If it is, that's your first signal. That's really good. And you also want to go down here and look at the oscillator, and you want to see it's not all green. You want to see it purple and red, or red and green. That means it is, again, consolidating and it is ranging. So that's the first thing that you want to do. Then from there, you check at M15. You want to see the same thing. Here it's virtually a good sign already. What is happening is the market is ranging. You know it is ranging when the price is touching the green the red and the blue lines. So it is horizontal. That means it's virtually moving up and down. So are you going to take trade? Well, it depends. It did not confirm with H4. H4 is telling you that it's still trending somewhat downwards, although there is the brush of red and the purple here. But if you want to be very safe, you want H4 to match M15. So right now, if you were really brave, I would say yes, you can, because it looks like this. M15 is telling you that the market is definitely ranging within this time frame. So if you were to take this trade right now, I would tell you to do it this way. Set it at one lot, 100K. Set it because right now you don't have confirmation on H4. I would tell you to take it at 2 pips, at 1 pip. So just for an example. So if I were to do that and I activate it, I wait for it to finish its movement first, its price. Let me see. Okay, the ADX is telling me that it's going down on H1 and H4, but M15 is going up. So that means it might still go up and down right now. So if I were to activate the app, I press start on this. It will take 2 simultaneous orders. And if we were to look at the back end and see what is happening to those orders, one of them is virtually hitting TP soon. And that's what we want. Then we want it to swing backwards and hit the TP on the opposite side, the sell side. So why did I do this? Why did I take that trade? Because M15 said so. But if you want to be really safe, okay, the first one already took profit. So if we look at our history, we already have, well, $6. But because you're not really going to take much profit when it's just a 1 pip. You really want to take it 2 pips. And it's Euro odd. Euro odd gives you less profit per pip versus a major like AUD USD and Euro USD. So this one is about to take profit as well. And it hit. So that was the first, the second method that I wanted to show you. Instantly, you have made 69 cents. So it's not really that impressive, but if you set it at 2 pips and you were trading at the majors, you would have made $20. If you were, if you set your hedge at 3 pips, you would have made close to $40 in a blow. So let's look at a major and see if anyone is ranging. That looks like it's ranging.
You're using a bot right now, right?
Yeah. It's a one blow thing. You just press it, it will take a market order on 2 directions. So let's take a look at H4. Okay. Well, it doesn't look too good, but you can still take a trade. Why? Because first of all, even though it's trending upward strongly, it's telling you here on H4 that it's starting to consolidate, it's starting to range because of the purple and red. And you also want to look at the ADX. You want to see conflicting signals. On H4, it's telling you the price is going up. But on the M15 and M30, the price is strongly trending downwards. What you want is a push-pull effect. One is going down, one is going up, because if that were the case, both positions will hit TP, especially at 2 pips. So let's look at M15. Okay. At M15, we see that the price is definitely ranging, and we see in the oscillator, it's definitely ranging. And you definitely want to see your ADX conflicting with each other. So M15 is telling you it's going down, H4 is going up. So will I take the trade? If I'm a gambling man, I will. And right now for demo purposes, I think I'll do that for you guys. So let's set it bigger. So you will see the profit potential, 2 pips, 20 pips. Yeah, 2 pips take profit because it's ranging.
What's volume and pips? Like, what's volume
Okay.
and lot, the difference?
The volume is the lot size you're trading. 100,000 volume is one lot. That means for every pip of movement, you make about 8 to 10 US dollars. So that means each position is going to hit, it's going to make you about $20 or $40 for each 2 pips. So stop loss, I think that's pretty evident. So if I were to apply that and I take it now, okay, both orders have been taken. Let's go back to the trading terminal and see what's happening in the price movement. This is at 2 pips, 2 positions opened. One of them is already about to go into positive. That's a good thing. There we go. Let's wait. You've made $3. You've made $8 so far. So the first pip is going to give you $10. You're now at 11. Take note that if you want to close a trade anytime, you can by just clicking on the X on either of these buttons. So you can see how fast it moves during the ranging market. Okay, first one had hit. So you have automatically made $18 on that trade. But you still have one more. You have this one. So you're waiting for the ranging to reverse and hit this. Eventually it will. So if we were to look at the price at AUD USD, starting to go back the opposite way because it's still ranging. And it will hit. Let's go back here where we can see the actual price action. But take note that when you're using this method, while I took the riskier move of just confirming an M15, you want H4 to show you the same signal so that there is no chance that this will go into what, negative 20 pips, negative 30 pips and hitting your stop loss or incurring you severe drawdown, because if the drawdown reached what, 50 pips and you're at one lot, that's going to cost you cardiac arrest. Like right now, you can see at 4 pips, one lot, that's negative 45 US dollars, which is not a good thing.
So how do we prevent this from happening? What's the best way? What is the confirmation? Perfect confirmation for this.
The ultimate confirmation is you want to ensure first that an H4, aside from this being mixed colors, not green, you want this not to be trending. Here it is trending. So while you see there's a retrace of the price down here, you don't want it to be far from the green, the red, and the blue bars. You want the price to be actually touching the green at the very least or sandwiched between these bars. And the same thing has to be present on M15. You want the price to be touching at least one of these bars or ideally sandwiched within these bars. When you find that perfect spot, and the best times to find that, I'll tell you right now, it's an hour after the Aussie Open, an hour after the London Open, and well, right now you can see it. It's about 2 hours after the US Open. Because after the opens for the respective markets, the price starts to consolidate. The trending ends. Trending is really strong at the open of the market. So that would be around 7 a.m. Singapore, 8 a.m. Singapore for the Aussie Open and the Japanese Open. For the London Open, that will be about 2 to 3 a.m. at 2 to 3 p.m. Singapore or Hong Kong time. And for the US Open, well, that would be 8 a.m. New York time. So that's the best time to do trend trading. Once you're done with trend trading, you proceed to range trading. And that's what we're looking at right now. So let's check the price action again. It's at 6 pips. Well, eventually that'll go down because the market is still ranging. But like I told you folks, because you're trading at one lot, it looks really scary. And the thing is, you can have assurance that because the green line is still pointing downwards, there is still a very strong tendency for the price to go down and hit your sell position, which was part of the hedge.
So do brokers frown upon this kind of trading?
No. In fact, they look forward to your commissions because several markets, several companies like IC Markets and FX Pro, they make a commission on your every open. In fact, you would see on their website that they really welcome bots. They also welcome scalping. This is technically scalping, you know, taking 2 to 3 pips. If you're taking 15 pips, 20 pips, well, that's different. That's called swing trading, and it's riskier for you. That's better for the broker because there's a chance that there can be a reversal. But I recommend this because you're in and out of the market really fast. Then once you close the position, you just open another one. Oh, but yeah, these 2 orders that we opened earlier for the trend trading, this one is close to opening already. It's at 4 pips, as you can see. The buy stop will be hit soon enough. This one is still quite far. Well, because GBP pairs and JPY pairs, they swing a huge amount of time. So this is really expected. But for the majors, it's small. So you can pretty much expect you to hit the TPs in no time. Try this tomorrow morning on demo on the Aussie Open. It's very easy during the Australian Open. Let's check for another one. Maybe GBP USD. Let's see if this guy is already it looks like it's ranging. Yep, I think this is ranging. So if we were to open yep, this is the ideal that you want to look at, folks. It's within the Alligator EMAs, the 3 of them. So that's an H4, and you see this, the mixed colors, not the solid green. The ADX is also contradictory with the others. So H4 is going down, H1 is going up, M33 is going up. Let's look at M15. So your first signal is taken. Also the same thing, pretty good. So the price is currently sandwiched, although it's right up there. So if we were to open a hedge, there's a very strong chance that the hedge would hit TP in both ends. And since this is a major, you can do it 1 pip. 100, 1, 2, 3. But because this is GBP, I recommend you increase your pip size, your stop loss to 50. Let's see what will happen if we do 1 pip. 1 pip take profit, apply. Opened. Let's look at the back end. So now you have 3 positions. GBP, one of them will eventually hit. And you can see the price for the majors. It's really big in comparison to the minors. One is closed, and we wait for this one to close as well. So what did GBP net you at 1 lot? It gave you $10 gross, $2 net. That is because of the commissions of the broker. But if you made that $20, it would have been a lot higher. Your net would have been about 11 to 12. So the ideal really is 2 pips TP. And this one is going down. It's about to hit. And it hit. There you saw the potential when both H4 and M15 are aligned. They're both ranging. So what is your total net for GBP? It's about $3 each. So that's about $6. So you made $6 in one move for GBP USD. So are there clarifications on the signals on the indicators that you would need for the GBP pair?
So we don't need to worry about at which point of the range the price is at right now. Just go for it as soon as you see the signal.
Yes, you want to ensure that it's sandwiched between the lines. You want to see the oscillator down here. Well, we were really lucky because now the oscillator is starting trending, but we were at this point earlier on where it was ranging purple colors. Ideally, you want your ADX to be conflicting as well. And if H4, for instance, is pointing down, your ADX, and your M15 is pointing up, then that means the push-pull effect would lead to both TPs hitting in no time. Another thing that you also want to see if you're using the ADX, and I would recommend that, is your ADX is not over 20. Because if it's over 20, that means it's about to reach the point of trending. If it is from 0 to 19, that is the ranging market. So that means the price is bouncing up and down very frequently. So both positions will hit. So you see that here right now. H4 is at 0.4, very weak. It's ranging. M15 is at 9, so it's below 20. So it's also very weak. That's what you want to do. Do you want to see another example for the hedging, or do you want to go to the final technique, which is PRC and using ADX?
What if the price is close to a pivot point?
Okay, very good question. I'm glad you asked that. Okay, so let's go to M30 so we can see more pivot points. The best time to really do range trading is between R2, this level. Let me do this, let me emphasize that, R2, draw a line there, and S2. Because the moment that the price goes beyond R3 and below at S3, that is already called a breakout. You can pretty much expect that the trend will strongly go in one direction and one direction only. If you were to do hedge range trading outside of R3 and S3, you're going to lose one position. One will definitely take profit, but one would lose. So if you were to do this really safely, keep it between R2 and S2. If you want to be extremely safe, you want to do R1 and S1. And that is the biggest piece of advice I can give you for range trading. So to recap the steps, if you have a notebook, first look at H4. You want to see the price sandwiched between the 3 lines here on the chart. You want to see your oscillator down here, not green. You want to see it anything but green. Then you look at your ADX. You want to see no numbers there at 20 or above. You want to see them below 20. And ideally, you want to see arrows pointing in all directions, not all aligned. If they were all green pointing up, that's a bad thing for you. Then once you see all of those signals, you go to M15. You want to see the same thing. You want to ensure that the price, the three lines here are in the ranging position. The price is sandwiched among the 3 lines. Down here, you don't see the green, but you see the most recent purples and reds. And you don't want to trade beyond R3. Right now, it broke beyond R3. So you are not going to take any ranging positions there. We were actually very fortunate that we traded before R3, because if we did the hedge right now, one position would have been left behind. It would have lost, incurred you, well, a loss of maybe negative 30 pips or so, because this is the GBP pair.
So all the pivot points are the same on each time frame, or are they different?
Oh, they are consistent. The pivot points are calculated from the previous day. So
Okay.
on the new day, today, we would see this R3 to S3 consistent until the end of the US Open, which is about 9 hours from now. And then tomorrow at the Aussie Open, the Japanese Open, a new set of pivot points would be calculated by that algorithm, and you would see it in your chart as well.
Okay, great.
Another thing that I forgot to point out in the first method, for method number one, for the scalping when you're trading, it's really safe to do trend trading if the price is over R2 and below S2, because that means you're close to breaking out. The trend will be very strong in one direction and one direction only. So if the price is between R1 and S1, pretty much you can expect a lot of consolidation and a lot of time before your stops are hit, your buy stop and your sell stop. So the pivot points also will help you in your trend trading.
I wasn't sure what you're doing differently when trending markets and then ranging markets, because as far as I understand, like the conditions are reversed, like
Exactly.
completely different, but I'm not sure what you're doing different.
Okay. What I'm doing differently is in the trending market, let's go back to that chart. What's that AUD? GBP CAD. Which one was that? Okay, here's the problem with one of them. This hedge that we took, when we took it risky, one of them is being left behind because the H4 didn't confirm. But we have these two pending orders that we opened for the trending market. So this one is CAD JPY. Let's go back to CAD JPY. Okay, CAD JPY is, this is the trending market. What we wanted to look for in the trend market is both M15 and H4 is aligned. So going in one direction only. So H4, let's go back to H4. It's going strongly up. That means we want to open only one position, and that is a buy position, a long position. So all the signals are confirmed. So green, and the green line here is going up. So at M15, we also see the same thing. So when we say all the signals for going long in one trending direction, we look at the most recent high point here, which is the tip of the wick of this red bar. We open a buy stop, meaning it is a position that is not a market order, but it is a position that will be triggered ultimately after this retrace. So right now we saw that it retraced downwards, and we have this pending order here. That's a stop order, and it's starting to go upwards very slowly. That's the thing. When you're at 2 hours after the US Open, the price movement tends to be a little bit slower, unlike when you start trading in the trending market at the break of the open itself. Movement is very, very rapid. Typically, after you open your stops, you would already be hitting your TP within even 1 minute to 5 minutes. So right now it's much, much slower. So this is the trending market. For the trending market, you do only stop orders. You don't do market orders. That is the safest way to ensure that you don't have any premature orders that are placed and that might even reverse. Did that make sense?
How do you put a stop order again?
Okay.
Like you right click and...
You right click. So right now I have an existing stop order. I right click at the tip of the wick, like for instance, okay, let's look at another. This one is a smaller wick. It's not really the tip, but eventually that'll hit. So if I were to put my mouse here, right click on it, I click on buy stop. So if I click on buy stop with the default settings I set earlier, it'll open a new line here. And eventually you would see that the retrace will hit that and go up in the trending. Assuming that this were a falling market.
So when it hits, it's closed?
It hits your TP. I set it at 2 pips. It's closed.
Okay.
So right now, if we were to go back to the dashboard, we have 2 pending orders. One is 2 pips, 3 pips away. One is 7 pips away. This one is really far away. So if you see it moving really far away, that means that the market is ranging too much. You can just cancel it. And that's a good thing about this technique. You don't have any open orders that are losing you money. They will only be activated when they are hit.
Okay. But you're taking a buy stop when the market goes up. Like when it's long, you put a buy stop, and when it's short, you put it as sell stop?
Yes, that's correct. Let me do an example for a sell stop. Let me look for another market that is going down. Let's go back to Euro odd. Okay. Let's hope this one is already looking like a good trending market. Oh, it's still not. Okay, well, it's almost trending downwards, but it's purple. So that means it's starting to consolidate, and you can see it. A consolidation means it's not moving further downwards. Or if it were going long, it's not like this row of candles, which is strongly going upwards. It's like a flat march of candles, which is not a good thing because you really cannot tell where it is going. So if we were to look at M15, well, it's almost going down, but it's still not the perfect signal.
Okay.
But assuming that you wanted, okay, let's say that you wanted to do a sell stop here. What are you going to do? You wait because anyway, it's going down. The green line is pointing down, so it means it's telling you that the pressure is downwards, and you saw this tip of the green here. That means that there is the beginning of downward pressure. If you wanted to open a sell stop here, you wait until this red bar completes its movement on M15. You wait until a green bar appears. That means that's the retrace. Wait until 2 green bars appear, and then assuming that there are 2 green bars here already to the right, you open a sell stop right at this point, at the lowest point of this red bar. So that means you right click here and you click on sell stop. And that order would activate when the price starts moving down after the retrace.
Okay.
But remember, this is not ideal because you can pretty much tell that the line is pretty much flat. So it's not really trending downwards. That was just for example. Yeah. So
and for the ranging market, you just buy it?
For the ranging market, the ranging market is different. What you're going to do is, if you were to go back to Euro USD, Euro AUD, which looks almost like it were ranging, you would open a hedge, meaning you would open both a buy and a sell at the same time. So let's assume, if the conditions look good, let's say H4, does it look like it's, well, it almost looks like, but it's not touching, but this one is there. And if you really wanted to open a hedge, it's ideal if this price were up here. That would be much better, you know, touching the green lines. Then you open the hedge here, open it at 1 or 2 lots. So here's the thing. If you open 1 lot and you set it at 1 pip take profit, it's very, very strong chance both the buy and the sell will hit. you'd make a profit. But the thing is, because it's just one lot, you probably just make around $3 each way. So that's $6. If you want more, just increase your lot size to 200,000 or 2 lots. That would most likely give you about, and set it to 2 pips so that you're in and out of the market really fast. This was this AUD USD is the one I was telling you, don't take a trade when you are not seeing the confirmation in H4. So the other position had closed because we set it only at 1 pip TP. So your net for Euro odd is, yeah, it's really small because it's just 1 pip. So the minimum should really be 2 pips.
I'm good.
Oh, good. Oh, great.
Yeah, let's move on.
Okay, awesome. So we will now go to the final, well, actually we have 2 more, but if folks cannot stand the bridge further, we'll just cover one and then we can do the other one later on, the fractal trading. So what we're gonna look at is the PRC, the polynomial regression channels. Here you only need one time frame. The polynomial regression channel creates a formula around the price line. So if I were to remove that channel, you see the big channel between the price. If I were to remove that and go back to the standard template without all of the indicators, we pretty much cannot tell the direction of the market. This method I'm going to show you right now is actually the easiest to use because it relies on just one time frame. You don't have to look at anything else except for that channel. And all you have to do is look at the signal that it'll provide you. And it's one of the indicators that I also provided. So when I load the template on M15, you will probably notice a certain pattern. When the price reaches this band, or this band, it will always bounce into the opposite direction almost all of the time. It hits this point, it'll go down. It hits this near this bottom point, it'll go up. When it's hitting definitely this price point, it will go the opposite direction. So Pandora, the CBOT, uses this as one of its core logics as well. With this manual indicator, you don't really have to think. You just wait for the price to hit that point, and then you open the opposite direction, expect to hit a TP. So what is the average TP for the M15 chart using this channel? It would be from this point to this point down here, it's about 52 pips. So that's a lot if you're doing one lot. From down here, going up there to the middle point, it is 44 pips. So if you were to trade with this regression channel, you can use lower lots like 0.15 or 0.25 because you're definitely going to want to milk all those pips, right? You don't want to do 2 lots only because then that's going to be smaller profits. But for trending markets or for ranging markets, I recommend only 2 pips to 5 pips maximum because you want to ensure that you're in and out of the market really fast because you're trading with really heavy lots. In this case, you can use small lots because you're making up with very long distances. So you can choose any time frame you want. Smaller time frames would lead to more opportunities. Like if you were an M5, you can see more bounces. This bounce, if the price hit that point, it'll go down. Now it's really up to you. Do you want to do a take profit at the middle line? Yes, you can do that. Or you can wait until it hits the opposite band, but it's very rare that the price line will hit the opposite band. What is the polynomial regression channel? Essentially, the theory is price will always want to hit the median. Like for instance, if you were to buy a bar of soap, you can pretty much expect a bar of soap is probably around $2 or $3. There are times during inflation, the bar of soap would cost you about $5 to $10. There are times when there's an overproduction of that bar of soap. That bar of soap will cost you 50 cents, but ultimately the price of the bar of soap would probably be $2 to $4. That's the median. The same thing with the currency markets. Prices would go up, it would go down, but it would always want to go for this median, the middle line. So what you want to exploit in the market is you wait for it to go to a really high price, then you know it's going to go down. Just like with a car that is overpriced for a certain period of time. You wait for it to be overpriced, then you sell, then you take profit at the middle. Same thing as if it was oversold. If the price is really low at this point, you can pretty much tell that it'll go up. So the PRC will give you those signals without you having to calculate or to think or to even look at EMAs and stochastics and RSIs and ADX. All you really have to do is you wait for it to hit either the middle band, the outer band. This is the outer band, and this is the external band. These are the extreme bands. It is much safer to wait for it to hit the outer band, this extreme band, because if it hits that point, it will definitely go down. There are times that if it hits this inner band here, that it might not really go down, but it'll go up, but that's rare. So if you want more trades, you take the position when it is at this point, either this two channels or the external channels. And that's all there is really to it. And for extra confirmation, you can also look at all of the other indicators that I have provided, like the Alligator indicator, like here. At this point, when it was down here, it was really trending downwards. You can tell if I were to put the arrow here, and you took a long position, a short position to sell at this point, and then you see that it started to turn green down here. That means that the downward selling pressure was really strong until it hit this point. It consolidated and it turned purple, and it started to go back up. So that's all there is to this third method. You can select whatever time frame you want. You can even do it on H4. H4 will probably give you about 200 pips worth of movement. So this is H4. And the time frame of H4, if you wait for it to reach that point, you know that there is a certain level of exhaustion, then you open a sell position. If you were at this point, you hit this point, you open a buy position. And the other beauty of this indicator is there is going to be a signal for you. It'll tell you when to buy and when to sell. You just have to wait for that and open a position. So the distance, if you were to open a position from this point to the middle band, it's about 272 pips. If you do the math at one lot, well, one lot is $10. That's thousands of dollars. So, but of course, you don't want to trade one lot on a long range bombing approach because there might be a reversal anytime. So that's a big picture. Any questions?
Yeah. So basically, you just put that indicator and then you put like the sell stop above and the buy stop below or something, and you just leave it.
No. In this case, you're not going to do sell stops or buy stops anymore. You're going to do a market order. In this case, like this bar down here. Okay, so the price is red. It's still going down, but it's not yet the time for you to open a buy position. You wait for this candle to hit this channel or hit this lower channel. It's even safer. When it hits this channel, there's a very strong chance it will start bouncing back up. So you will open a long or a buy, not a stop, but a market order. So this is the difference from the very first method. The first method is a stop order. It's a pending order. This one is a market order.
Okay.
You can also do this on very short time frames, M1 if you want to, or M5. So if you were to look at M5, you can see that an M5, it tends to hit the extremes of the ranges. So you wait until it hits the end of this. Then you know that when you start to see that the bar color had changed from green to red, that's when you open a sell. then you wait for it to reach the middle point. But remember, if you're an M1, the distance traveled is much shorter. So this is just what, 19 pips in comparison. So this is M5. So you would adjust your stop loss and your take profit accordingly, depending on the time frame that you are working in.
Okay.
Okay.
So should we take into account the overall trend?
The overall trend, that is another thing that I wanted to share. So yes, you should, if you want it to be very safe. Like right now,
Yes.
the overall trend is going downwards on M5. But if you were to look at, say, the ADX is going to give you a big picture of the thrust of the market in the other time frame. So if M30 and M15 are telling you that it's going up, then you definitely don't want to sell an M5, but right now M5 is going down. But the thing is, you notice M5 is going up right now? That's because the overriding power of M30 and M15 is upwards. It's 15 and 28, all the more in 30, it's 28. So it's actually a good thing right now to take the position of a long position if you were at the point of the red bar here, because M30 and M15 are supporting that, that directive. So when you're trading on the PRC channel, you just select the time frame that you want, then you just cross confirm it with one time frame up. You don't have to look at all the time frames. Just look at the next time frame up. So if you're doing M5, look at M15. If you're doing M30, then just look at H1. So all clear?
So
Okay.
which time frame do you use in this method?
Well, the ideal, if you really want less noise and more stability, it's really M15. Even for the very first method, M15 is stellar because it filters out the, the false breakouts, the wrong signals. So, and it also gives you enough pip movements for profit. Like in this case, if I were to draw a line from the outer band to this middle band, it's like 28 to 30 pips, 35 pips. So that's pretty ideal. So if you take out your pip calculator and you're doing one lot, so one lot times $10 times 30, that's $300 worth of profit if you were to trade on the M15 time frame.
And confirmation with M30 or H1.
M30, definitely. So M30 is telling you that it's in the big picture, it's going down. So M15 says it's slightly going up. So if you look at M30, this is what it looks like. Well, not really that strong though. It's almost exhausted. That's why it started to, but the last bar is green. So it's slightly going up, but the general trend is still going down.
So we should not be greedy using this method. We should take profit at 10, 15 pips, right?
Yes,
Quickly.
the reason that Pandora is at 97% win to loss ratio is because Pandora is set to TP at a maximum of 5. Ideally, if it's trading on two pips, it increases the lot size. So when you lower the pip target, you lower the chances of you going bankrupt. If you increase your target to say 20 to 100 pips, definitely something can happen along the way. What if Donald Trump, for instance, tweeted that he's going to attack Korea? That's going to
Yes. Yes. Trump's tweets can make the market move like crazy. Yeah.
Yes, I'm sure you've heard of many times that appeared in Forex Factory. Trump would tweet out
Yes,
of the
yes.
not the news, 300 pip movement. There we go. You don't want that.
And I think Trump knows what he's doing. He's insider trading for sure.
Yes, definitely.
Yeah.
So the last.
What about stop loss? Stop loss?
Okay, good question. The stop loss for this is the same thing that I would do with the trend trading and the range trading. I would take the stop loss at the easiest 2 or 3 resistance levels below or above the current price point. So for instance, let me return the pivot chart. So The pivot is real pivot. I uploaded it to Google Drive again. You can use that. I just want to see the most current. So, okay, here we have it again. Price is here at 66023. If you were to open assuming that you waited for this price to hit this, so you wanted to go long, right? Because you expect it to go up on M30. So you would set your stop loss below, maybe at S4. And that will be a very safe stop loss because even before it hits S4, there's already this outer band here calculated for you. There's a chance that it will not hit that. But if it breaches this outer band and it breaches S4, then that means it's a total reversal. Donald Trump probably tweeted something and it screwed up the entire algorithm. This method of using stop losses based on pivot points is far superior to the standard method. Most traders would use the average true range, but ATR is not dynamic enough to protect you. This at least would give you levels that you can confidently look at visually and realize if you made the right decision or not. And if you made the wrong decision, it's better to cut your losses before you lose even more.
So what should be the risk to reward ratio in this? Like, how much should we keep it at? 1:1 or less?
The standard for the usual traders who don't really confirm on multiple time frames. Right now, what you all are going to be doing is confirming on multiple time frames. You can pretty much set a very wide stop loss because your confirmation levels are very, very high, meaning that the trend bias is very much in your favor. So H4 is telling you that the trend is going long. M15 is telling you the trend is going long. The ADX is telling you go long. That means you can set your stop loss at virtually any point that you want. But for good measure, because right now we're in the coronavirus situation, we are in the point of oil crashing to negative 13 US dollars per barrel, it's better to use the maximum pivot points as your maximum stop loss. Because if you go beyond S4 or R4, that means your original bias had been totally invalidated by something in the market that you did not foresee at the moment and that possibly impacted all of the algorithms. And well, it's better to cut your losses. So that's it. I would tell you, set your stop loss, not at 1:1 or 2:1. That's too arbitrary. That's the standard method of trading. Use this pivot points. Use maybe 2 levels, 3 levels below the opposite of your direction, or even your maximum, R4 or S4.
And we should not go short when it's close to a support level and not long when it's close to a resistance level, right?
Agreed. So if you were, for instance, going long and it were approaching R4, that's the resistance level, you pretty much cannot breach that. It will start to bounce down. That's the entire logic of the polynomial regression channels, because it's trying to guide you away from those points of exhaustion. If you're trying to sell or short, don't go beyond S4 as much as possible.
Okay, great.
Okay, so we have any further questions on this method? And if you have none, we can cover the last one, which is really quick, unless people have to go, and we can just cover that another time.
Well, let's finish it.
Let's do it.
Okay, let's do it then. Let's go back to the cleanest template possible. Let's return the alligator, because the alligator is such an awesome indicator. And we're going to add the fractal. In fact, all we really need here is 2 indicators and and the fractal. Also, the fractal is a standard in your arsenal of, but wait, let me change that. Oh, wait, why did everything load back up? Sorry. Let me clear everything. Okay. Here's what we're going to do. The fractal, the fractal pivot that I'm using is a customized version, but there are standard versions also in your trading platform. And almost no individuals that I've ever met use it, but it's a very powerful indicator, especially when used with the Alligator. Essentially, what it's telling you is you see these arrows that appear here. These are points of extreme pressure wherein the market previously tried to break through. It failed, it retested, it went back up, and then ultimately it went back down and went below that level. So looking at this, for instance, if we were only at this point, imagine that the prices here didn't exist, but we were here at this point where the arrow is. When that fractal appears, what that's telling you is a fractal is a mathematical calculation of patterns. What it's telling you is at this very point, the market tried to break through even lower, but it failed because of some reason or the other, and it went back up. But it's signaling to you that the market will ultimately retest that position and go back again and go even far lower, which it did at this point and at that point. So to trade with the method of fractal trading, all you really have to do is you look at your Alligator indicator, you see the general trend bias, you wait for the fractal to appear, and when you see it appear and there's a retrace going back up, all you do is you open a position, let me go to the bar, a sell stop in this case because the trend bias is going downwards. You open a sell stop at this position. You set the TP at 2 to 5 pips. It's up to you. Usually with fractal trading, you can be more lenient. Even 10 pips is okay. As you can see here, from this point to this point, that's probably around 10 pips. And then you just wait patiently, usually go up a bit. Then it will ultimately go down and beat the original support that was signified by this fractal. The same thing will apply for long positions, but you have to align the fractal trading with the Alligator because like in this case, there is a fractal that appeared here. That means there was some point that the market tried to breach this level upwards, but it failed and it just kept on going down. You ignore this fractal because the trend bias of the Alligator is downwards. So you want to only open a sell stop or a buy stop when your position is well below the Alligator or well above the Alligator if you were going long. And that's it. It's pretty much a waiting game. You can pretty much set a minefield on all 26 pairs at each of the open. So the best practice of doing this tactic is about 30 minutes before each open, the London Open, the Australian Open, and the US Open, look at all of the pairs that are tied with that market. So for the Australian Open, everything that has the Australian dollar, Euro AUD, AUD USD, AUD, NZD, you look at all of the charts, you load the fractal, you load the alligator, and then you check for the trend bias. Is it going downwards? And is there a fractal appearing aligned with that bias? You open a sell stop. If it's going upwards, then you check and see and you validate, then you open a buy stop aligned with it as well. Then you set the arbitrary take profit, well, 2 to 5 pips. That'll be good. And following the same rule of the ATR, I mean the pivot points as your stop loss, you can use that as your stop loss as well. Now, the beauty of this is these will not be market orders. They will all be pending orders because they're sell stops and buy stops, meaning that they will only trigger when the market breaches well below that point. You can pretty much expect that about maybe 10 or 15 of the positions that you set ahead of time before each of the open sessions will hit, and they will hit fast because once they're in the right direction, your 2 pip to 5 pip target will be hit very strongly because the market trends very strongly at each of the opens of the market. So yeah, that's pretty much it. It's one of the simpler methods also. It just takes a lot of time because you have to set it in advance. But when you do, the reward is pretty good.
No, in this actually, the stop loss should be above the highest point, right? For example, in this case, it would be at the highest green one, right?
Yes, in this point, if you're looking at the red bar, you can set it either at the green line itself, because if it breaches above the green line, then that means it won't hit. But the thing is, stop loss does not play a big role here, because once the market goes down and your TP is only 2 pips, you will notice here that when it breaks the original purchase order, it will really break it by a big deal. In this case, let's measure that length. From down to this point, it's about 19 pips, 36 pips, thereabouts. Let's look at another pair for comparison and to see the logic. Euro USD, the one that pays the most. The ideal time frame for this, from my point of view, is M15, M30, and H1.
Okay.
Let's look at M15. Here we go. If you placed a buy stop here at this point when this appeared, you would have made a lot when you hit this point over here. You see this huge green bar? And the thing is, the logic is, you want to set a stop, a buy stop, when the price is well above the green line only. It shouldn't touch. That is the first thing that you have to look at. So if I set a buy stop here, it would definitely have hit after waiting a little bit. It will go down here, it'll go up here, it'll go down, but then it'll go up there. That means finally the price had been tested. You don't want to set it here, but if you did, because it was aligned anyway with the green line, if you had set a stop here, you would have seen also that down here, ultimately it would have hit if you set a stop. And you would not have lost either way because they were just all pending orders. So that's the beauty of this, this technique. They will all be pending until the market conditions align, and the market conditions would often align because 80% of the time there was a lot of pressure at these points of the fractals. The only time you should not take the fractal trade is if the fractal appeared when the line itself, the bar, was sandwiched between, that's a cardinal rule, between the green, the red, and the blue. Because that means there is a mixed signal. The market wasn't really sure if it would go up or down. But this is a good signal. This is a good signal. This would have been hit here. This would have been hit here. Let's look at one final pair before we open forum for any questions. Let's look at Euro GBP. Okay. If we had opened a sell stop at this point, it would have hit profit here, here, and here. Same thing for this point. The signal is right. The green bar is pointing downwards. It's telling you to sell. If you open the sell stop here, you would have waited a bit. It would have ridden upwards, but then down here, it went all the way down. Same thing with this, but this is a wrong signal. You shouldn't take this because the bar here for this fractal is sandwiched between the blue, the red, and the green lines. You don't want the price line to be touching any of the bars when you open a sell or buy stop.
Yeah.
Okay, so open forum. Any questions, any clarifications, things that still don't make sense?
When we're using like the bots you put on Patreon, do we still like do we activate them whether or not like the conditions are there? If I see the conditions that suddenly don't match, do I deactivate the bot? You know?
The only time I would tell you to deactivate the bot is during news, 1 hour before news, 1 hour after news, especially for those that automatically trade. Like there was this bot there, the Megatrend bot that was uploaded. You want to keep that running only before and after the news, not during the news, because the news tends to skew up a lot of algorithms.
No further questions.
Thank you very much. Really appreciate your time.
Awesome.
Yeah.
I'll be providing a link.
Yeah,
to
thank you,
download the
Joey.
video. Oh, my pleasure. I'll provide a link for all of you to view the video because I'm sure that some of you might want a refresh. And if you have any clarifications, I posted a link on Patreon where you can join a Telegram group. So